of buying VIX calls when you can and not when you have to. We'll call this buying insurance, and it's best to buy insurance when the sky is clear. If you call up your agent, you're trying to buy hurricane insurance when the storm is bearing down on you, then it's a little tougher to do. I think what we see right now is that people are buying the VIX because they are worried about what might happen. So it's pure protection. But also, the VIX is very low. We hear a lot over here about why the VIX is so low. But the VIX is simply a measure of how volatile we expect the S&P to be over the next 30 days. That is how much we expect it to bounce around. But let's look at the recent past. It hasn't bounced around very much, so you wouldn't expect it to be very volatile over the next 30 days. So the VIX is probably where it should be, given what the S&P has done over the last couple of months. That doesn't mean it's not a great time to be buying protection, whether it's VIX calls or S&P puts.
Scott, another side story that we've been talking about this morning is that more and more companies are finding a reason to start courting others. I mean, how long has Hillshire Farms been around? You and I probably grew up with that as toddlers. Now you've got to take out bit by Pilgrim's Pride. I mean, a lot of the action now, instead of being in the tech space up in the clouds, is now starting to veer down into real hard things. Drugs that people need, foodstuffs that people need. And I think, and it's a perfect segue to your very, very favorite hit name in the entire world, which happens to be that old Golden Arches, McDee's.
That's right. I do love McDonald's. It's a great company with wonderful management and a wonderful brand. But you mentioned the takeover action that we've seen recently. I think it's actually great for the market that people are now buying companies that make stuff, as opposed to what we saw earlier in the year when we had a couple of tech companies, famously Google and Facebook, paying obscene multiples of not earnings but revenues for companies, and not necessarily because they thought it made sense strategically, but they were buying them simply to keep them out of the hands of a competitor. So now we see much more rational takeover activity, people who are buying companies that make sense with what they're already doing, largely because they're going to be accretive or there's some sort of synergy. This is wonderful. This is not frothy. When somebody's buying somebody who makes sausage, it's really tough to say that there's a bubble going on. That's just plain old, we're going to make money and we're going to buy the company that makes sausages doing